So before we start off, I would also just like to acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. We pay our respect to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. Now, with regards to today's session, most of the concepts that we will cover off today will apply to most people, but not every concept will apply to everyone in this virtual room. As such, the information we cover off today is general in nature and without taking into account anyone's direct financial situation or needs. So if you are looking for more specialised advice or information, we have CSC Super Specialists for our PSSAP membership. So just as a heads up on that, we'll come back to this later on. For PSSAP, we do have another step for gaining information. But if you are one of our PSS members or CSS members, that super specialist space is not available for the PSS and CSS just due to the fact that a different type of setup of fund and things like that. So with today's session, we are looking at or focusing on PSSAP insurance. If you're not a member of PSSAP, if you've chosen to go with another super fund, or you are a member of our PSS or CSS, the concept around insurance, so making sure you have enough support, cover, death and income protection, things that we're about to talk about, still applies, but it'll just be a different type of benefit that you'd need to look into for that fund specifically. And we also do have financial planners that can help you dive into setting yourself up to a better financial position as well. Now, with our choice products, so PSSAP and our retirement choice product of CSCRI, they do have what's called a target market determination. And the target market determination is effectively designed to describe the types of customers that a financial product is appropriate for. So based on certain needs and objectives. So a target market determination, if you have a read through that, that may actually sort of highlight whether this product is relevant to you as well or supports your goals and objectives. Oops. Now, today's session, we've got you for about an hour. We've got you for about an hour. The session itself probably going to take somewhere between about a bit over 30 minutes, probably close to 45 minutes. As I mentioned, Will, my colleague, is in the chat function for any questions that you do have around the topics today. So he'll do his best to answer all of those as we're going through. And you might find that some of the questions you're asking are answered through the session today. And we should have maybe 5-10 minutes at least for any Q&A at the end of the session as well. Now, to begin with, who is CSC? So at CSC, we've been serving those who serve our country for over 100 years. So we are one of the oldest super fund providers or companies around. With our heritage and experience, we do pride ourselves on understanding you and your needs, leading up to and into your retirement phase. So superannuation, having insurance built into it, is looking after you in the short term, whereas obviously the aim of the super itself is looking into that retirement phase. As one of Australia's first super funds, we have that century of unique experience in serving those who serve Australia, because we do look after the public service and defence employees as well, defence members. And CSC manages and administers up to 11 super funds currently. Now, we do have 2 funds that are actively open to new members, and that is ADF Super for our new defence personnel, and then PSSAP for the public sector superannuation. Now, the super fund for current and former Australian government employees is that PSSAP. It's our accumulation scheme. It's open to those who've worked for eligible agencies as Australian government employees, but it is also portable with your career journey. So if you do leave the public service, you can keep using PSSAP with any civilian employment as well. Now, today's agenda, we'll be looking at Life Plus cover basics. So just the overview, broad overview of the product available, Life Plus insurance. or Life Plus cover. But we'll then be looking at a case study. So using Liam and Nina as our case studies to go through and looking at the ways the insurances work within their sort of lifestyle. And then talking about making your cover work for you. So make sure that you do have the right cover. So we'll have a look at some tools and ways to make sure that you've got enough insurance to cover yourself should something go wrong. So today, I said, we'll demonstrate how super provides your financial security, not just in retirement, using those insurance calculators and tools, but during a working career. So we're going to cover a journey through the life stages of two of our fictional members, Liam and Nina, who are benefiting from the changes made and the most up-to-date cover provided by PSSAP. Now, we hope you leave today with a few steps to help shape your membership within CSC. But first, what are the types of events that you would need cover for yourself? So, while it's not pleasant, sorry, I said computer's just a little bit slow. It's not registering a few things. While it's not pleasant to think about, being truly financially secure means making sure that you're covered for any unexpected events. Now, while working for the government means you will have some balance of sick leave for time away from work, sometimes the road back to work can be quite long, and your sick leave alone might not be enough to make sure you're able to get better. Now, this becomes a greater risk when you consider that Comcare is only there to cover workplace-related conditions and not anything that's developed outside of work. So although Comcare might be there to fall back on, being mindful of all the things that are not work-related to make sure that those circumstances or unexpected events are covered sufficiently to assist you. Now, if illness or injury is likely to bring your retirement forward, would you have enough in your super and savings to pay for any early retirement and look after yourself and your loved ones for the rest of their lives as well? So factoring in, spouse, partner, maybe even kids if they're still young when something goes wrong. Or indeed, if you were to pass away, are you leaving loved ones behind who need that financial support after you're gone as well? Now, while we hope to never have to face these situations, having insurance ensures that you and your loved ones are covered and well prepared. It offers peace of mind, so paid for out of your super fund as well, and something we hope to never need to use. So I'm just going to ask a poll here. So I'll ask a couple of questions as we're going through, just to gauge people's not so much interest, but we'll see if you're still awake through this, but also just to gauge where your mind is in relation to insurance and your levels of or needs of insurance. Fortunately, as I mentioned, my computer's just running a little bit slow, so I'll just wait for this to come up. But the first poll I'm going to launch is, do you feel like you need cover at all? Now it's just a simple yes, no right or wrong answers. We don't keep these. We don't, they're anonymous. But some people potentially have, you might be close to retirement, so you're comfortable that you don't necessarily need insurance. You might have other assets, incomes that potentially, if something was to go wrong, you could live off. So it's just to get a bit of a gauge of where people's heads at in relation to the topic of insurance for today. And look, as I said, different for everybody. So we've got a couple people saying no, they've got enough in savings for however that is. Or as mentioned, they may be close to retirement. So, or even in retirement age bracket, but just still working. So they may not need that cover. But then for a lot of people, and probably the majority of people in their working life, how will you pay the bills if something goes wrong? So it's really important to understand what your insurance needs are. Now, as mentioned, we're going to use a case study here. So we're going to look at Liam and Nina. And we're going to do it from a, full story and put it into context as to why these things are the way they are. So we're going to meet Liam, who's 34. He's working in the APS, and is an APS6 role where he has been for the last couple of years. Liam's daily life is stable and predictable, filled with the usual ups and downs of being a busy guy in his 30s. He has a solid group of friends who are always active, where he was introduced to his now partner, Nina. Nina is 38, currently working the APS as well as an EL2. Now, she and Liam were instantly the perfect match. Having focused on her career for so long, she's learning to just settle in the moment. Sorry, she and Liam were the perfect match. So Nina's learning to just settle in the moment, and Liam is a perfect pace for her. Now, both are fit, healthy, and active. They're similar in that way, in that they both wanting the same things in life, but they have different strategies they believe they need to use to get there. Now, Nina is encouraging them both to start looking into super, so they take the time to learn what about their insurances are offered in super. And the common sort of theme we sort of see with people is, the fit, healthy, active side of things. I'm not going to need insurance. So I'm fit and healthy. I'll be fine. I'll push through. But Murphy's Law, unfortunately, someone's always going to have the accident. I'll use a friend a few years back, quite healthy brother-in-law or brother to the wife. Basically just on a motorbike, on a ride to see his partner, and unfortunately someone cut him off and completely changed their lives forever. They've had to tap into their insurances. They're still fighting potentially insurance claims as well, not through their super. Super's all been sorted. But it was something that, again, fit and healthy, not expected to need, and then all of a sudden thrust into it due to someone else's mistake. So it is good to sort of gauge, do I need these? What do I need? Make sure that I have enough. Now, super offers you financial security during your working life by offering protection from those unexpected events. So protecting your loved ones financially if you were to pass away, PSSAP offers a lump sum death benefit. Now, there's two sides to the insurance. There's a default amount based on your age, or you can choose to tailor the amount to meet your specific needs. So this benefit amount would be paid separately and in addition to the balance of your super account. So something to be mindful there is if you're sticking with, say, the default level of cover, nothing wrong with that, if that meets your needs. But if you decide to change your level of cover, as you get older, the longer you work, potentially that insurance need would change, whether it would increase due to a change of lifestyle or purchasing a property, or it could decrease because you start to pay off a property or kids leave home. So default cover will always be something in the background if you've left it as that, and it changes based on a default level. But your choice cover is something you can change through your life as you're going. So your death benefit is something that might be looked into in that circumstance. And we're going to play around with the calculators and tools a little bit later to see that. Now, similarly, you can also protect yourself from the financial impacts of TPD, total permanent disability, with a lump sum cover. Now, like death benefit, it can either be a default level of cover based on your age, or you can take the step to tailor that insurance to meet your needs. Now, this cover is in addition, again, to the super balance, which can be claimed upon in the case of TPD. So the combination of your super and your TPD insurance, or the combination of your super and your death cover, needs to be something that's sort of factored into how much do I need to cover. You can sort of add the two together to get your full picture of your cover. Now, each of those insurance benefits are paid in addition to the balance of your super, as I've mentioned. Now, lastly, in addition to the two lump sum benefits, PSSAP also offers income protection. Now, it's a salary replacement for a period of time. If you're unable to work due to injury or illness, PSSAP offers up to 2 years or up to 5 years of cover under that income protection. So we'll have a look at what the default cover looks like with Liam and Nina. So something to consider with regards to insurance as well, and this is something to do with a few changes a few years back. Sort of a concern with superannuation was that people had multiple super funds, they had low balances, but funds kept applying insurance premiums and fees and charges that may or may not be relevant. So there was a change a few years back where insurance became something that you might need to opt into based on age or balance. So for members under the age of 25 and with an account balance of less than $6,000, they can elect to opt in within 60 days of receiving their welcome letter and within 180 days of commencing their designated employer to get age-based life plus auto insurance cover. So the key thing there is that you need to opt in if you're under 25 or have a balance of less than 6,000. Now, if you don't make a decision, the cover will automatically commence once they reach 25 and have an account balance over $6,000. So again, it's something to be mindful of based on age. It could be friends, family who are starting in the workforce. It might be worth looking into their insurances as well. Are they covered based on age or balance of their account? Now, for members 25 or over who have an account balance of 6,000 or more, their cover will commence automatically, and we write to them notifying them they are covered once they commence. Now, if the basic Life Plus auto cover isn't enough to suit the financial needs, members can apply for Life Plus Choice cover, which allows them to make or take out additional IP, so income protection, additional TPD, total permanent disability protection, or additional death cover. It's important to note, though, that this is subject to a full application and they must be under the age of 67 for income protection or under the age of 70 for death and TPD. So our income protection will cease at 67 and death and TPD will cease at the age of 70. So with regards to that choice cover, you do need to basically provide an application or provide information that's requested to confirm what your cover can be approved for and what the fees and charges will be for that level of insurance. Now, life events such as purchasing property, having a child may mean that a member needs to consider reviewing their insurance. And if a member wants to check how much cover they have, you can log into your Navigator portal and speak with the helpline, and they can elect to cancel, reduce, or apply for additional cover through the Navigator portal. So let's have a look at the Life Plus auto journey first, so the default insurance. But I will just highlight, whilst we're sort of partially on the topic of, health and longevity and being active and fit, as a CSC member, you will have access, or PSSAP member, you will have access to the AIA Vitality Starter, exclusive to eligible insured CSC members. So it's a health app effectively. So know your health. You can earn points for meeting your steps, going on runs, eating healthy, stuff like that. Improve your health, so continue earning those points to boost your health, obviously. But the benefit of the points is you can earn rewards through that AIA Vitality program towards fitness devices, Virgin flights, movie tickets, things like that. So as part of an insured membership, you can opt into that AIA Vitality if you would like to. So I'm going to ask you a poll after the next two slides. So if you sort of ducking in and out of things or tuning into a couple of other things at the same time, completely understand, work life's busy. But the next two slides are about auto cover. And a lot of people are defaulted into that auto cover. They haven't ever looked at it before. So we'll ask a poll after the next two slides. So these two would be worth sort of paying attention to just to answer that poll. So Liam's auto cover. So he opens up and checks his super statement. Hasn't really thought much about what tailoring his super would look like, but Nina tells him he should probably consider his options. Now, his 2-year membership with PSSAP currently provides him a default insurance called Life Plus Auto Cover. Now, based on his age, Life Plus Auto currently provides Liam with a death cover of $325,000 that would be paid to his dependents if he was to pass away. Now, his Life Plus Auto Cover also provides a lump sum benefit in the event of TPD, so $162,500 Again, being that age-based circumstance. Now, Liam is 34. So if you are 34, you're in the default level of insurance, potentially that would be your sort of around about your cover. In addition to the 2 lump sum covers, there's also the income protection. Now for Liam, it's $90,400 as a total benefit per year. And that would be $75,000 broken down into monthly payments paid into his bank account, but also $15,400 in super contributions for the first 2 years whilst claiming income protection. So if he needs to claim for longer, Life Plus Auto will cover 50% of his salary, so $50,000 paid in monthly payments, and then $15,400 in super contributions for the remaining up to 3 years. So one sort of advantage of the Life Plus insurance is it is providing superannuation at the 15.4% PSSAP level, whereas some other insurers may not or potentially won't provide that level of super contribution. Now, it's good to know that as a member of PSSAP, Liam's super guarantee is that 15.4%, no matter what proportion of his income protection is at. So even when he's at the 50% or he's at the 75%, he's still getting superannuation at the full rate on his full salary. Now, if we look at Nina, Nina's 38 years of age. So she's feeling like her career's on track. She's recently joined the APS, commenced her PSSAP membership. Now, she has gone through the PSSAP new member welcome experience, logged into our navigator, and is looking to make some choices to proactively tailor her super. So she's updating her details as well. And that's the advantage of the navigator portal. You can update everything you need to through the navigator portal. So I just realized I haven't checked the chat function just in case there's any sound or visual issues. Now, when it comes to her insurance as a member of PSSAP, being a permanent employee and over the age of 25, her cover will automatically commence when her account balance reaches $6,000. Quickly scrolling, making sure there's no sound issues. No, it looks like Will's just smashing out the questions, which is great. So she'll need to make a choice to combine her super funds with PSSAP. So if you just joined up and you've got other super funds somewhere, you can convert them or roll them into PSSAP. Now, alternatively, Nina can trigger her cover to commence with a lower balance. She just needs to opt in. So remember that if you're under the age of 25 or you have a balance of under $6,000, you need to opt into the insurance. Now, for both Liam and Nina, the income protection they have will increase with their salary automatically. So that's a key thing. Life Plus Auto Cover, the salary automatically is updated in the system as your salary changes without needing to apply for any increase in cover. Now, Liam decides that with no children, no debt at this stage, he is comfortable leaving his cover as is. Nina chooses to do the same, but is nervous that if something happened and she couldn't work, that maybe her TPD cover isn't enough. So you can see there that they've both got the same level of default insurance. The salary a little bit different. If we just quickly go back to Liam being a lower salary, he's got 75% of his salary for income protection. Nina has 75% of her salary for income protection as a default. But based on their age, life stage, the TPD and death cover is the same, even though they're a couple of years different. Now, the poll I was going to ask is about those 2 levels of insurance or 3 levels of insurance, income protection, TPD, and death cover. I just need it to load. Apologies again for the slow system. But the poll, and I'll get you to think about it while it's loading and then I'll get it up onto the screen, is do you believe that those levels of insurance would be enough? So are Nina's and Liam's level of insurance, where is it? If you had, yep, that's the one. Launch. So if you had the same cover as Liam and Nina, would you have enough? So 162,000 TPD cover, $325,000 death cover, income protection of about 75% of your salary per month, plus super. And again, no right or wrong answers. Everyone's will be slightly different. Look, a couple there with the, I have no idea how to tell. And look, that can be the case for a lot of people. When it comes to insurance, you know, not the blasé response, but I get my statement, says I have insurance, good to go. Or I get a pack, you know, it's 4 or 5 pages long. I don't read through the fine print, but I know I've got insurance. It does happen constantly, but it is something that really should be at least once to begin with, you know, really sit down, nut it out, make sure you do have enough. And if you're unsure, it's what these sessions are for, to, you know, give you some steps to do it yourself, but then also give you the avenues to maybe seek further guidance to set these things up to give you the best possible outcome. And this, for those that have sort of said, yes, that's the right amount, based on the circumstances now, that might be the right amount for your circumstances today, but in 3 or 4 years' time, 5 or 10 years' time, life could change. And at that point, when life changes, is that enough insurance? Is it still the right amount? Do I need to amend it? It's something that shouldn't be forgotten about for a long period of time, but it can be set up for now, forgotten about for, say, a couple of years, but then look at, have things changed? Or when your life changes, so in Liam and Nina's circumstances, they buy a home and get engaged, potentially that's the time to then readjust their insurance. Now, let's be honest, you've just bought a home, you've just gotten engaged. Superannuation and insurance probably the last thing on most people's minds. We do get it, but it does become a relatively important thing when circumstances change. Now, a year or so has gone by. Liam and Nina, looking to the future, they purchased their home in Townsville. We're getting you right down into the details of the couple's life, and they've gotten engaged. So they're successful, enter into a mortgage of around $500,000. And in more exciting news, as we said, they've gotten engaged. Now, Nina is pushing them to really consider how having insurance and looking into insurance cover could make all the difference for a physical illness, a longer term disability, or death. Now, especially with huge financial commitments and the prospect of starting a family as well, so a further life change in the coming years. Liam's first thought are that these decisions are daunting, complex, and a way out of his hands, but he also knows deep down that it's a smart decision and Nina is right. And that's the thing, is they are daunting, but once you start to get into it and potentially see whether you're at a very big shortfall or you're potentially, you know, exceeding your insurance needs, it starts to make you realize I need to be involved in this to get the right outcome, make sure I am covered enough and I'm not covered for more than I need to be, things like that. So, tailoring your insurance needs. You can review your cover and update your preferences to make sure your super stays relevant throughout your life. Now, by considering you and your family's current and future financial requirements, you can ensure that the super account is aligned with the long-term goals. So yes, you're paying a premium for these insurances. So one of the key things from that side of it is if you're paying for more insurance than you need, it's having a bit of an impact on your superannuation. But don't be under-insuring yourself because of that at the same time. So it's important to regularly review and adjust your insurance to reflect the changes in your financial situation, such as salary increases, major life events. Now, as I said, auto cover, the salary increases automatically in the system. But when we start to amend your insurance, so choose that choice cover product, it's not an automatic cover. You need to update your insurance as it changes. So through this, you can create a uniquely tailored super account that provides peace of mind and financial security for you and your loved ones. You should consider what debts need to be settled to support you or your loved ones in the case of death and TPD, as well as ongoing cost requirements for you or your loved ones if you can no longer earn an income at work. Now, you can use our insurance calculator So what I'm going to show you now, if it wants to work for me, as I said, apologies, very slow system. So through the online or just through the website, but you can get there through the online portal. We have our funds and products. We have PSSAP Life Plus. That was on the page, but I'll just sort of step you through getting there. And I'm sure will throw in a link to the Life Plus app calculator. And as you can see how slow my internet is at the moment. So you can see there, you can dive into a bit more detail on the Life Plus Auto, the Life Plus Choice, but then you can get to our Life app calculator to work out what level of insurance do I actually need. Now we do have, as I said, 2 open products. If you're a member of our PSSAP, you can get a quote for how much insurance you want to increase, but you need to obviously understand what level of insurance do you need to begin with. So that's where the calculator becomes quite a useful tool. It can show you what level of cover you have and compare it to what level of cover you potentially should have based on your financial situation, your family situation, all these different things. Now, obviously, do have a read of the disclaimer, the limitations, the assumptions that are involved in using that calculator, because it obviously can't accommodate for every circumstance. But it shows you what the assumptions are that have been factored in. So death expenses, TPD expenses, TPD car renovation assumptions, future proportion of income that death and TPD could provide. All these different things are in there as assumptions, which you can amend if you need to, if your circumstances are different. Now we'll look at Liam, and we'll, as I said, 34. Now I'll just use today's date. So 1992. He's currently a couple, but with no dependents or no dependent children. His pre-tax income, $100,000. Has, let's just say, 5,000 in the bank, 5,000 in shares, no investment property, but has a balance of 150,000 in super, and no other investments. But obviously you would fill that in according to your circumstances. Now the mortgage, as we mentioned, they've just bought. So the mortgage, just double check if it's the, yep, so just the current balance of the total. So $500,000 mortgage, as we mentioned. Let's say there's a $20,000 car loan and a $5,000 credit card, which, may or may not be at its limit, could be at zero, could just be something that's there in case of emergencies. But the insurance will assume worst case scenario. All of these things need to still be paid out. Now, the current life insurance death benefit was $325. The current disability was $162,500. Hope I'm remembering them right. And then what was the monthly amount for all existing protections, which was $7,500, I believe, from memory, for income protection. So what this will then spit out is, where is there a shortfall or potentially an overinsurance for the circumstances that Liam has. Now, you might look at some of these and say, estimated required cover is $1 million for death benefits. The circumstances, you can click down further and break down the assumptions, and it shows you sort of everything, which I'm not going to go into for now because just conscious of time. It is something you can play around with. But things to consider with that level of insurance is, will your spouse or partner want to go back to work in the short term, long term? They might not have enough personal leave, sick leave, things like that to get them through a period of time. So of that $1 million, half of it pays out the mortgage, the other half allows the spouse to, take a step back, sort their life out, things like that. Alternatively, you could look at insurance and go, well, we just need to make sure the house is paid off and I know that Nina will go back to work. So yes, it's saying that there's a severe underinsurance here, But that should, at the very least, just drive the conversation of actually how much insurance do we really need? We need to make sure that I do have enough, you have enough if I pass away. So it should start the conversation. It doesn't necessarily have to be, this is exactly what you need, but it starts to raise, why am I underinsured by this much? What do I need to bridge the gap for? The TPD side of it, 162,000 with TPD cover for a case study as an example. If someone has income protection for the 2 to 5 years, that's great. They've got an income coming in for those 2 to 5 years. But after that 5-year mark, the income protection may not have been potentially enough. So maybe the TPD cover is needed in that circumstance. But additionally, at the 5 years, the income protection ends. And if someone can't get back to work by the time their income protection has run out, there's a high probability they're actually TPD. They haven't been able to retrain in those 5 years. They haven't been able to rehabilitate. They haven't been able to get back to their current job. What's the likelihood of, if I use my income protection to the full extent, am I potentially going to be effectively TPD, unable to get back to work ever again? Now, at 34, 162,000 isn't going to be a lot to live off for the rest of their life. But 930,000, or sorry, a million, can be invested, can be paying an income, it can be set up to do a lot of things to help support that longevity without being able to work. So hopefully it hasn't scared you looking at those numbers based on Liam's circumstance, but it should be driving the conversation of, okay, what do we actually need? We really do need to break this down and work this out. Now again, so I'm just going to quickly check the chat just to make sure there's no audio issues. And I'm going to raise another poll based on, it was a very quick run through, again, just being conscious of time. But if you were to sort of sit down and know the requirement, what level of insurance you needed, do you feel like you could tailor your own insurance, or do you at least feel like you could, run the calculator, run the tools and see what level of insurance you need? So I'm just going to run that poll. But again, so do you feel you could tailor your own insurance, or do you feel you would need help? Now, again, no right or wrong answer. At the least, if you feel like you could be estimating your level of insurance, that's one step towards tailoring it. Once you know the level of insurance you need, you can then go back to that previous option of get a quote, and you would effectively follow the prompts of answering all the questions required to get a quote for that level of insurance. So those two tools together, and the get a quote one is a bit too long for today's session, but as I said, you can play around with these without any obligation. If you feel you could, great. If you couldn't, we do have that next step of support, which is our super specialists. And I'll get Will to put a link in there, but there'll also be a QR code towards the end of the session about that. The super specialists can start to talk you through a bit more about levels of insurance and needs for insurance and stuff like that, so they can go into a bit more detail. Okay, so again, sticking with Liam and Nina, after engaging with those super specialists to discuss their further insurance needs, they decide to each apply for an increased death and TPD cover through PSSAP. So they both take out TPD and death of up to $900,000, which will pay the house off, provide a lump sum to draw an income from to cover their regular expenses in, at least the short term. Now, they decide to keep their income protection as is. So they consider changing their waiting period, however, but as neither of them have a huge balance of sick leave, they think 90 days makes sense. Now, a key thing about the income protection, and I'll use a colleague at CSC that has been with us for almost over 40 years now, I think. They've got well over 130, 140 sick days on the books. So for them, their income protection with a wait period of 90 days or 60 days probably isn't really beneficial to them because they've got sick leave that will pay them for 130 days. So they could change their wait period to the longest possible or up to the 120 days, let's say. And that would actually bring down the premium, the cost of having that insurance. But it means if they're out of work for the long term, they can use their sick leave for the 120, 130 days they have, and then they can tap into that income protection later on. But their premium is less because it's going to take longer to apply for it or need it, not apply for it. And one other thing I'll say about insurance for income protection, if you ever do need it, but you have sick leave, you can put in the application for your income protection before your sick leave has run out and before the waiting period has run out so that it's ready to go if you actually get to that point where you need to use your income protection. And you can also withdraw the application without having to use it if your sick leave ends up being enough and you can get back to work before that time frame runs out. Now, the unexpected, another year on, and Liam and Nina are enjoying married life. They're home in Townsville. It's a usual Saturday morning, and Liam is out with his friends on his favorite mountain biking trail, a place that he and Nina used to visit together. But today, Nina is out with their new baby boy. Now, Nina didn't expect a call from Liam, as the group were usually out of range until mid-afternoon, but her phone rings and it's one of Liam's friends. Now, Liam has had an injury and he has been taken to the ER in an ambulance. Their friend tells her not to worry, and even though he doesn't know the extent of his injuries, he knows that Liam is in a bad way. Now, Liam doesn't know the severity of his injuries yet, but over the next few hours, the true impact of his accident reveals fractures to his neck, ribs, back, femur, and leg. His injury sees him unable to work. Now, there's no real answers from the doctors by Monday morning on exactly what treatment or surgery Liam needs or how long he'll be out of action. But Liam calls in to his employer, letting them know that he's unable to come to work. His manager mentions that Liam might have some cover associated with PSSAP. Now, Nina helps Liam log into CSC Navigator. His account confirms the level of insurance they have. It's still in place with a waiting period of 60 days, which will need to be adhered to before payment can be made. Now, if you were in that circumstance, got another poll here, how might you be feeling at that point in time? It's an unknown level of impact on the injuries. There's unknown requirements for surgeries. There is insurance cover there though, so just remember that as well. But there's a waiting period and that does need to be adhered to before any payments are made. What would be the things running through your mind at that circumstance? Again, no right or wrong answers. Let's say someone had gone and done all their insurance a month ago, they're probably feeling comfortable from an insurance point of view, but very uncertain from a health point of view. So it can be very big range of sort of responses. I'll use myself as an example. I was in a car accident, managed to walk away thankfully, and my mind just went into fix everything gear. I'd called insurance, I'd called someone to come pick me up, I'd called the police, I'd done everything I needed to do within sort of an hour or two of the surgery happening. And that was just the way my mind works. And again, thankfully I had all the right insurances in place for the car and stuff like that. But other people will, be concerned about things in different ways and deal with things in different ways. So with the thoughts that people sort of have running through their head in that circumstance, it does sort of raise that question of, insurance really is an important thing. Having those insurances ready and available, set up the way you need them, set them up, would hopefully alleviate some of those stresses, some of those concerns at that time. But it's something that obviously people, as we sort of said, don't tend to think about in the forefront or before it happens. So the uncertainty. So Liam initially struggling. He's frustrated and worried about the impact his injury may have on his career. Now, the thought of being away from work for an extended period was daunting, and he feared falling behind or being replaced. Now, additionally, Liam was deeply concerned about Nina, their mortgage, and their son. So the financial and emotional pressures weighed heavily on him. He's on sick leave for now, but knows he will be out of action for several months, if not years. So he calls PSSAP on the 1300 number, puts the claims manager on speakerphone with Nina by his side, and talks to Kelly, who is now his claims manager. Now, that will be for the entirety of the claim process. He's nervous because he feels completely at fault for what has happened and very much responsible for what will happen in the future. Now, the insurance claim or the claim manager assures Nina and Liam that PSSAP intricately understands the APS, the employers, staff, and needs of our members. So we understand the expectations placed on families to recover and return to work. Kelly explains that we'll work with the employer through the rehab process as well. So part of your income protection and part of the Life Plus cover includes rehabilitation or even potentially some level of retraining to try and get someone back into work and be able to work within their limitations if there are ongoing limitations. Now, case manager assures Liam and Nina they've done the right thing by calling straight away. As far as the claims timeframes are concerned, usually makes the process quicker in their experience to call straight away, and assures them even though the accident was not at work, they're covered and protected through PSSAP. Now, they don't have to wait for the waiting period to expire to start the claim, but they do have to wait for the waiting period to end for payments to begin. Now, Kelly explains the first steps to complete the paperwork and lodge their claim. She'll then work with Liam and Nina to complete and submit the forms in the claims pack, check the application, and pass the documents to the insurer. So we will provide you a claim manager to step you through it and work with you to make sure the claims are put in the right way to the insurer directly. There's a little wait while the insurer assesses their claim. And Kelly explains that generally with income protection claims, they can expect the decision within 2 months of submitting all your claim forms. So as mentioned, starting the claim before the wait period is over can definitely put your mind at ease that once my sick leave ends, the wait time ends, my claim's already in and it'll be ready to go before that happens. Now, Nina asks Kelly if she needs to engage with a solicitor to submit the claim form. Kelly does explain that the choice is theirs, but for the most part, it's not necessary as her job, Kelly's job, is to support them through that claim. Now, as Liam is feeling a little more in control, maybe more active, his doctor has said he could start to go back to work. He mentions that to his case manager, and they can refer to a rehab program which might be suitable to him. So with CSC's guidance, Liam is committed to his rehab program. That's marked the beginning of his journey back to wellness. He set small, achievable goals and celebrated each milestone, gradually regaining his strength and mobility. The insurer will start to work with Liam, and he thinks he could get back into work, but not necessarily the role he might have had before the accident. Now, recognizing the need for a different approach, Liam and his employer work together to find a new role within the APS that accommodates his current capabilities, something that maybe is not so physical. He transitioned to a position that allowed him to contribute meaningfully while continuing his recovery, and this new role provided him with a sense of purpose and opportunity to stay connected with the team. So with his new role, Liam continued to focus on maintaining his health and well-being, and he incorporated regular exercise and physical therapy into his routine to prevent further injuries. So he's now back on track. So potentially for that up to 5 years, the income protection there will support him through that process. He could potentially progress into part-time work or full-time work, but in a different trade. So there's a lot of support there through that process should that happen. And as sort of mentioned, if rehabilitation becomes not possible, or if retraining doesn't support getting back into other employment, then that TPD claim then can kick in after that fact. So your income protection is that short-term cover, and the TPD cover is the long-term cover. So Liam's story highlights the importance of ensuring that the right support systems, so that's friends, family, and super, so insurance/super, are in place to take on those challenges. Now, having achieved his goal to be back at work full time, He recognises the journey he has taken both physically and mentally, and talks about the last year with colleagues and friends at his son's second birthday. And his friend has not considered cover. His wife turns to him and mentions she has also recently joined the PSSAP and started looking into cover options. And then hopefully they get pointed in the direction of, maybe attend these sessions, engage with a super specialist, or jump on and use the tools that are available. And that's it for today's session in relation to the sort of insurance journey and the concepts and things to think about with insurance. I'm sure Will's been absolutely hammering out and nailing all the questions that have been coming through. But as the default super fund for APS for 20 years, CSC is committed to supporting people like Liam and Nina in providing financial security, not just in retirement, but throughout their working life. The commitment to our members has seen PSSAP be awarded with several honours as well. And for next steps, basically what we would suggest is, maybe log into CSC Navigator and have a look at what your insurance levels are. Off topic, but nominate some beneficiary. If something does happen to you, where do you want your super to go? Review that cover, opt in if needed, if you're new to the public service, and use the insurance calculator or needs calculator to work out what level of insurance do I need. And you can see there the QR code for our super specialists. And you can sort of dive a bit deeper into those insurance conversations based on your needs as well. The last slide I'll show, because I just see I noticed Rick jumped in there. We do have an education page on Instagram now for our team to provide, snippets of education around super. We'll highlight things like we've talked about today with insurance, and a little bit of fun for us as well to engage with our membership in a different way. So feel free to join up to that as well, and you might get some tidbits that are suitable across the board when it comes to super. As one person put it in a session, some positive doom scrolling, get some good information to help you out in your own personal circumstances. That's it from me today. Thank you very much for allowing us to join and provide the presentation to you. We hope you got something out of today, but we are happy to hang around for a couple of minutes if there are any questions after Rick jumps in with what he needs to say.
I was just going to thank both yourself, Sam, and Will for the presentation. Always lots of good information, and just a reminder to all of our staff that you can come back and watch the recording. So if you've missed something, come back and watch the recording. It'll be up on our website in about a week to two. So thanks again, Sam and Will, and great session. Thank you very much, Sam. I will head off to my next meeting. Thanks, Will. Take care, guys. Bye.